Hey guys, this is Richard Yi. Today is September 5th, 2011. So 1 month after the S&P downgrade of the US sovereign debt, silver is up 13% and gold is up 13.27%. Again, it's a pretty significant move in the metals market. Whereas the other major indexes, such as Dow Jones Industrial Average, is down 1.79%. S&P is down 2.06%, and Nasdaq is down 2.12%. Well, the US dollar basically didn't move. That means it has lagged behind the market already by 13%. So those they're not performing as well. So the major move in the financial market is basically caused by the disappointing job report that came out on Friday, which basically tells the economists that there was zero job added to the U.S. economy in the month of August. The report was definitely not seen as a surprise to the Austrian economists, who successfully predicted the crisis since the beginning. They knew every detail of the crisis, for instance, how it was formed and what's the cure to it. However, definitely this report is seen as a surprise to the mainstream economists. As you can see in the financial markets, since the market has such a huge reaction, that means economists or investors, mainstream investors, were not really prepared for this hit. I think there's no need for me to explain why the unemployment in the U.S. has been so high and has been so persistent. As you know, it was obviously caused by government intervention in the economy. Uh, However, there's another thing that really caught my attention and it was pretty interesting, and that was the Treasury. So after the downgrade of the U.S. sovereign debt, most investors were thinking that the yield on those debts would definitely increase because there's more risk loaning money to the U.S. government. Therefore, higher interest must be charged in order for them to be willing to loan money, right? However, that was not the case. U.S. Treasury actually the yield actually decreased after the downgrade. Why was that? It was because many investors were actually buying into the Treasury because they were afraid of the volatility in the financial markets. I mean, this is just ridiculous. The volatility in the financial market was caused by the downgrade of U.S. sovereign debt, which was the correct decision, and that definitely shows a weakness in the U.S. financial house, and definitely wasn't in order. However, because of that, they buy into the treasury debt again during the month as those are volatility. So this was a bunch of nonsense. So I think in the next 3 months or so, the yield on U.S. Treasury will actually continue to decline because QE3 will definitely have a portion of the QE3 will be used to purchase those treasuries and continue to provide demand for those treasuries. Therefore, it will have a lower yield. Obviously, the Federal Reserve couldn't keep doing the quantitative easing forever, and because if they keep doing that, inflation would be so high, and people just couldn't live, and they're gonna face a situation like Germany after World War One. So obviously, the factor that influences inflation is obviously money printing, and the Federal Reserve has created lots of money in the past 3 years. However, most of those money has not been loaned out by those depository institutions yet. Those depository institutions are parking those money back into the Federal Reserve because the Federal Reserve is paying those banks interest for keeping the money with the Federal Reserve. Why is that? Well, maybe they don't want the money to leak out so fast, right? They're now currently paying 0.25% interest on the money that those depository institutions or those banks that they park those assets reserve in the Fed. So the banks are actually earning those 0.25% interest on those asset reserves. Let's do a quick calculation. The assets reserves of depository institution, that basically the assets money that park in the Fed is currently at $1,600 billion, and since the Federal Reserve pays 0.25% interest on those asset reserves, then annually, assume no growth in those reserves, which they will grow, of course, but we do a conservative estimation. If we assume that they don't grow and the Fed is annually paying those banks $400 billion every year, right? So $400 billion every year, and that is um, 4.2% of the M2 money supply of the United States. So even if even if those money does not leak out, those assets reserves does not leak out from the Fed, the money supply in the U.S. is actually still growing at 4.2% annually. And this 4.2% does not take into account of other methods that the Fed used to pump money into the economy. So obviously, the actual growth of M2 money supply in the U.S. is actually much higher. As I have explained in the previous videos, the U.S. is not a productive economy. They don't produce things, right? In order for prices to kind of stabilize or have lower rate of inflation, you want to have strong production and kind of a pacey, a stable growth in money supply, not a pacey growth but a stable growth. However, the United States does not constitute a productive economy because they don't have the plants, you don't have the plants, the equipment. Those are all in China and other productive economies. So, and as the Chinese RMB appreciates against the dollar, it will be much costly for American citizens to import goods from China. Therefore, inflation will be going much higher in the United States in the future, and that will definitely force Ben Bernanke to stop QE, which will definitely plunge the Treasury market, and definitely the rate on those Treasury yields will eventually go up. Remember, the reason why many of those investors are still buying those treasuries was because they see this on declining yields. That give them a sense of safety, in their mind. If the yield on treasuries start going up, they kind of sense they have a sense of danger in their mind, and possibly they're gonna cut back on those buyings, and of course they will be get educated along the way on this period. So definitely the U.S. Treasury in the future, um, after 3 months or so, I think will start gradually increase the yield. I'm gonna talk about something even more interesting, and that's about the Chinese economy. So last month, as the Chinese central bank released the money aggregate statement, it actually states that the M2 money supply in China of the months in the months of July actually decreased by 2% compared to June. I mean, that's phenomenal. So eventually, the Chinese central bank really come to their senses and stop their crazy money production, which caused serious inflation in China. And obviously, the reason why they're now taking serious measure definitely has something to do with the increased value of Chinese yuan against the U.S. dollar. Because as Chinese yuan appreciates, it will be harder to import inflation from the U.S. Therefore, even though the Chinese foreign reserve of the U.S. dollar is still growing, but it's not growing as fast as before. Therefore, they don't have to issue as much RMB because remember, China has the peg currency against the U.S. dollar. So basically, the more U.S. dollar reserve it has to issue more RMB to kind of back it because they're using the dollar as a reserve instead of using gold, which is way more stable. But they're using dollar, so the more dollar they have to issue more RMB, right? And simply, the more RMB issued, the higher the inflation in China. And the reason why the inflation in China has been so high, well, part of the reason was the economic slump in China and the financial crisis. But another major reason was because those import of inflation from the U.S. Because remember, there was lots of money printing in the U.S. and the U.S. kind of export those money to China. So China now has a lot of those assets reserves. Therefore, I suspect that the Chinese CPI in the future month ahead will start gradually decrease or even stabilize, but definitely it won't increase as much as before. And of course, as the inflation gets under control in China, people's purchasing power starts to increase, and they can afford more goods both locally and imported, which will definitely give them a higher standard of living. So the well-being of the Chinese would definitely, you know, would be much better. So thank you guys for listening, and I will be vlogging again soon. Take care, guys. Bye.